intensified, allowing gold to skyrocket to a new all-time high of 2078. Following rumors of Pacific West Bancorp potentially filing for bankruptcy, market fears of a recession were yet again heightened. And at the time of this report, it appears that the shiny metal is moving in an upwards fashion. In this report, we aim to shed light on the catalyst driving the precious metals price and assess its future outlook. Economic data highlighting the negative aspect of the US economy have facilitated gold's upwards movement, with the precious remaining well above the 2000 key psychological level as these words are being written. Last Thursday, the US initial jobless claims came in much higher than anticipated, with the actual figure coming in at 242K, in addition with the preliminary non-farm productivity on a quarter-on-quarter basis worsening drastically by coming in at minus 2.7, greatly stressing the rapid deterioration in economic growth in the US. In addition, the continued failure by the legislative authorities in the US to resolve the debt ceiling standoff have intensified market worries that there is a very real possibility that the US government may default on its debt, leading to a catastrophic failures seen instantly as the ex-date may be as soon as June 1st. The persistent fears of the US defaulting on its debt resulted in outflows from the greenback as traders' worries intensify, highlighting the very sensitive situation that currently exists in the US. In addition, the continued banking fears surrounding Pacific West Bancorp that may be the next bank to declare bankruptcy in the US has allowed gold to capitalize from both events respectively, given its safe haven status in times of financial instability. However, we note that the US non-farm payrolls figure for April came in much higher than anticipated, in addition to the unemployment rate for April reaching all-time lows, reversing some of gold's gains in the past days, as the US employment market remains tight and possibly easing worries for the economic outlook that may not be as dire as was initially anticipated. Overall, the financial releases from last week facilitated short-term inflows into the precious metal as market worries of a recession were heightened at some point. The Fed last Thursday hiked interest rates by 25 basis points, as was anticipated by market analysts. Following the news, the greenback weakened, which allowed the precious metal to capitalize on a weaker dollar and continued its upwards ascent, supported by the FOMC's accompanying statement mentioning that, in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook, implying that the bank may remain on hold in the future. However, the relative hawkish statements by Fed Chair Powell that it is not appropriate to cut rates seem to undermine market predictions of a possible rate cuts after the summer, but had no visible effect on gold's ascent.